Hey everybody, Josh Sigurdson, a World Alternative Media here, and of course we're joined by author and economic analyst here at WAM, John Sneisen. And there has been no shortage of news regarding the economy lately. You know, we've been hearing all these top Keynesian economists saying themselves that it looks like we're on the verge of a recession. It's kind of funny to watch after all these years of us talking about these issues. Suddenly the mainstream is forced to kind of take in the obvious as we head first into major recession. And of course, the recession has been papered over for a very long time. It never quite ended in 2008, but we're talking the next big collapse. And I think that it's going to dwarf all the previous collapses we've seen in recent American history. Now, of course, everything started to happen as I was in Turkey, and we do have videos coming up on that as well. And obviously, there's no shortage of news when I'm unable to talk about the news. That always seems to be the case. But there's this new article out of Zero Hedge, and I can't help but find it hilarious. Scary, but hilarious, because we've heard this before, and I'll get right into it. It says QE4, and I quote, "Not a QE begins. Fed starts buying $60 billion in bills per month beginning next week." And as the article goes into, just one day after we laid out what Goldman's revised forecast for the Fed's not a QE will look like, which for those who missed it, predicted that the Fed would announce monthly purchases of about $60 billion for 4 months, split across treasury bills and short maturity coupon treasuries in order to replenish the roughly $200 billion reserve shortfall and support the pace of growth in non-reserve liabilities. The Fed has done just that, and moments ago, well ahead of consensus expectations, which saw the Fed making this announcement sometime in November, the U.S. Central Bank announced it would start purchasing $60 billion in bills per month starting October 15th. This will be in addition to rolling over all principal payments from the Federal Reserve's holdings of Treasury securities and the continued reinvestment, all principal payments from the Federal Reserve's holdings of agency debt and agency mortgage-backed securities received during each calendar month. In short, the proposed schedule is virtually identical to the one Goldman proposed yesterday, one which sees the Fed purchase a grand total of $100 billion or so in treasuries the near term, and one which is meant to engineer a one-off level shift of roughly $200 billion over the course of 4 months. And you can see this chart here. Exhibit 1, we expect the Fed to rebuild the reserve buffer quickly over 4 months following a slower trend pace of purchases. Carrying on, it says, but wait, there's more, because just as today's surprising spike in repo use suggested, mere not a QE may not cut it. And just in case, in order to provide an ample supply of reserves, the Fed will continue with $75 billion in overnight repos and $35 billion in term repos twice per week, at least through January of next year. Where the Fed's announcement differs from Goldman's proposed POMO schedule is that this appears to be a far more aggressive form of not a QE, because as the Fed notes, it will continue well into the second quarter of 2020, meaning it will last beyond the 4 months proposed by Goldman, to wit, in light of recent and expected increases in the Federal Reserve's non-reserve liabilities. The Federal Reserve will purchase Treasury bills at least into the second quarter of next year in order to maintain over time ample reserve balances at or above the level that prevailed in early September 2019. The Fed's proposal indicates that between the continuation of repo operations and the net $60 billion balance sheet expansion, the Fed's balance sheet will reach roughly $4.2 to $4.3 trillion sometime in quarter 2 2020, and they show the full statement. I'm not going to go through the whole statement, but John, let's talk about this, because this not QE seems to be QE. What's going on? Can you explain what's going on here and what this all stems from?
Well, first of all, the not QE, of course, that stems from, it was Powell just recently in a speech saying that, just don't call this a QE. It's just laughable. Quantitative easing in the first place is laughable. It's just basically by printing M0 and then buying that up with given the bank's excessive reserves, keeping it on the Fed's deposits, and then you actually buy their toxic assets that they have, especially mortgage-backed securities. Because these mortgage-backed securities, I was listening to a guy, I forgot, it was on Real Vision, but I forgot the guy's name, which was telling us that, basically almost all of the mortgages that was delinquent back in 2008 are still delinquent. There's people that he said that hasn't paid their mortgages for over 5 years, some of them. And the banks are just not willing to put these out on the market because that'll crash the real estate markets, of course. And they're just propping it up, of course, with the Federal Reserve buying mortgage-backed securities, which is just an underlying derivative that holds all these debts on it. So it's not even the real asset. Of course, they're on. We were talking about me and Tim were talking about this a little while back, where it's not just. Like they've been having a shadow QE already, which they've been doing what's called a shadow. Well, not a shadow, but they've been buying what's called an outright treasury and outright mortgage-backed security purchases. And those have been bought. There's been anywhere between 400 million up to 2 trillion, 2 billion every day that's been purchased outright. So that basically means that they're buying it, putting it on their balance sheet. Nobody's been talking about that, of course, and everybody's just talking about it as a shocker that they actually are gonna do now quantitative easing again, which is basically the same thing. What they're gonna have to add to that pile now, other than the mortgage-backed securities that are garbage, is they're gonna actually have to add all of the problems with the collateralized loan obligations, which is packaged corporate debt, and that's going to be a major problem, of course, with all this corporate debt that's out there. I'm doing a huge report right now where I'm talking about all of the debt that's on the corporate side, on the non-financial side around the world. Of course, the U.S. is really bad. It's between 30 to 50% of the debt that's rated junk right now by the rating agencies, and how much we're trusting the rating agencies, and how much big of a problem that is, and of course you're looking at them also having to probably add on the asset-backed securities that we've been talking about, that has car loans, credit cards, all this kind of credit onto it. So this program is $60 billion. They're probably going to have to add it, at one point. Don't quote me on this, but I firmly believe that this is going to be, 500 billion at one point that they're going to have to add. And it's just going to be more and more, because the more they prop up this debt system that's, at the peak debt right now, because you're seeing people struggle left, right, and center. They're talking about recessions everywhere in the world right now. In every single country, there's everything is fine. Don't watch the repo market, the liquidity crisis. And it was funny. Remember, we were talking back in December when Mnuchin came out and said that it wasn't a liquidity crisis. Well, it was pretty obvious that it was a liquidity crisis. It was a hiccup. And now, of course, they had to full on, do a huge market intervention in the overnight money markets. And of course, I've been looking at the repo operations overnight, and it's been anywhere from, 30 to $50 billion every single night. And then, of course, they had to add on what's called the 14-day term debt, which is longer term debt than just overnight. So they had to bail out that as well, and that's been close to 50 billion almost as well. So what you're seeing
John,
is,
I mean, at this point, what isn't being bailed out? I mean, everything's so fake, and I've never seen anything like it. I mean, I'm amazed that we're not hearing more in the media and people panicking at this point. It's a vindication that we have, not maybe the vindication that we want, but we've been talking about this for a very long time here at WAM, and everything that we've been saying for all these years has been coming true. And of course, you wrote the book, The End of Freedom, How Our Monetary System Enslaves Us, where you talked about a lot of this kind of stuff eventually going to happen. And that was back in 2015? I mean, we've come to a point where we're at a crossroads, and I'm worried that people aren't going to figure out that this is a reality, that this is something something that we need to prepare for because we're coming to the very end of the line. I mean, what do you think all this says about how close we truly are to the complete collapse of the global economy?
Well, I think there's going to be one last try, and I think we talked about this many times, Josh, about going negative interest rates. Of course, Powell said in his speech that, we would never touch negative interest rates, but I think that's where they will go. But first of all, they need to figure out this crypto thing and create their own digital versions of the currencies so they could, then enslave you and put you into that grid where, you have your money in the bank, it's not yours anymore, and you can't even touch it, you can't even take it out in cash. So now you're stuck in that, and of course that, then they could put in real negative interest rates because the problem has been in Switzerland and Sweden and Denmark is that people are trying to keep the cash out, and of course Sweden, that's really hard, and same with Denmark. But Switzerland, people there have been in throes because there's so many people that have a lot of money that have just been putting them in the vaults. So the money is sitting there instead of sitting in a bank. They've been sitting, in vaults as wealth insurance on top of the gold and silver that a lot of these guys have. So what we're seeing now, and what's interesting, if you look at the actual the Fed's balance sheet, it's almost jumped $200 billion since the bottom, and that was about September 1st when the bottom was. And that's a pretty substantial increase in just a month. $200 billion. You're looking at, the Fed were doing, I believe it was $85 billion at the top within a month, and now they actually had to put out $200 billion almost in total of purchases, and of course the line of credit that you can call it the repo operations, which is basically a day by day bailout and giving a line of credit for them to survive, for them to then give back. But the problem is it's now leaking into the 14-day term. So the debt that was toxic is now, having to be lent for longer periods of time. And potentially, they're going to have to, keep it and have it permanently on the balance sheet of the Fed. And that's what I think we're going to see here. And of course, the Fed has been running out of options. What are they going to do? They're just going to keep on printing money until the dollar the trust in the dollar is completely eviscerated. That's what's going to happen.
Yeah, and I mean, we can't forget a couple weeks ago, Donald Trump saying that he wants to see negative interest rates. And I mean, I remember a couple of years ago, if we said that, the president would call for negative interest rates, people would laugh at us. And here's the thing. I mean, all fiat currencies eventually revert to zero. They always have, they always will. We've gone over that a million times, and every single one throughout history has. Why would this time be any different? And we're seeing the everything bubble, pension bubble, derivatives bubble, which is multi-quadrillion dollars worldwide, housing bubbles worldwide, almost everywhere you look, homeless population skyrocketing, inflation getting worse, food portions getting smaller. And with all of that said, I mean, most of the people who used to say that we were fear-mongering have disappeared. They're not as much in the comments anymore, but there are still a few left. There are a few left. And for those people, can you explain to the people that are still clinging on to this financial system as if it's going to last forever, what they need to know and why they are incorrect in their faith in this system that has collapsed every single time throughout history?
Well, I've had several conversations with bankers, that said that there's, for example, if people took out cash out of the banks, there'd be no problem because they could sell the short-term debt that they hold on their balance sheets. But the problem is if you have a bank run, most likely there's a distrust in the actual system. So how are you going to sell debt that people are not trusting at all, and they don't want their hands dirty on? Look at Argentina, Venezuela. There's now Zimbabwe again, of course, is getting into hyperinflation again. Yeah, so what you're seeing here is just a blind trust to the system, because that's all that it is. It's just a trust, and that's how the system is based upon. If it didn't have trust, it would be eviscerated within in a year's time, and that's what every single fiat currency system has done. Is basically within a year, when that trust link is broken, there's nobody wanting to touch that fiat with a 10-foot pole, and then of course it collapses very quickly because there's no tax revenue to come in. Nobody wants to, transfer or use it as a medium of exchange. So they would have to print mass upon mass amounts of money to keep the system afloat from all the loss of capital that they had. And there'd be deficits of 20, 30 trillion dollars. And you would eventually see very fast after that they would completely collapse. This is what happens every single time. And I just gotta laugh at people that try to. I had a guy that I think he called me like a Viking barbarian oil drilling moron or something. I found it quite amusing, but it's really funny. But this is like somebody at Fed Troll. I was high up in the federal, like in a bank, and like what is your credentials? Well, my credentials is I just picked up about 30 history books and maybe did a little bit of reading what happened instead of just blatantly believing the mass what do you call it, basically at school, they're getting brainwashed, the PhDs, into believing that this system is a valid system, that they could keep it afloat with all these policies that they put out. It's all this funny, language that they put out there, but all that it is, it's just money printing. And we see in the results, they blame inequality on rich people. It's the Federal Reserve and the banks, printing all this debt. That is the cause of all
so many
the
problems stem from that.
Oh, there's almost every single problem on earth could basically you could retract it back and find that it was actually caused by the printing of money, by the destruction of the value of the currency.
Yes, central banks and government, who would have thought? And of course, it's just basic economics. And that guy that you're talking about, I saw those comments and I was surprised he could even spell credentials. I mean, mouth breathers everywhere. But, again, this is basic economics. This isn't complicated. It's just people like to complicate things more than they need to be. It all comes back to that faith that you talk about. And of course, the subjectivity of value, because basically everything, if you don't have faith in it having value, it doesn't have value, period, end stop. So when it comes down to basically anything, any form of trade, if the other party says no, then it no longer has value in their eyes. It's subjectivity of value, and that's how things work. And when you look at a currency on a worldwide basis that is being forgotten and basically left for left to the wind, and you're seeing all these countries swap out at the same time. And by the way, this is a domino effect, and the banks are bankrupt. All of this has to come down eventually, and they could print and print and print. Maybe they'll have a new war. Maybe that war will be able to prop up a system a little bit longer, massive deficit spending. We saw ancient Rome do this, and no one has learned since. But anyway, John, as we close this off, I think it's important to go into the solutions, because those solutions are extraordinarily important for helping people get out of this system, and that is the usual responsibility. The responsibility of the individual could not be more important now more than ever, because people have been pushed into complete dependence and debt servitude and all sorts of things over the years, and it's important that people look towards food, water, shelter, self-defense, so you're not gathering things for the toughest guy on the block, as I have said so many times for so many years here at WHAM. And of course, we have to look at alternatives to the currencies that are shoved down our throats via legal tender laws and fractional reserve lending and all this craziness that has led to the homeless population today, that has led to wages not paying for a house, and both parents being out of the house, working their butts off and still being hardly able to afford food to put on the table. You have to look towards gold and silver, in my opinion, as wealth insurance. This isn't investment advice. We're talking about wealth insurance. And of course, you look back at history, and this seems to be the case. And of course, decentralized cryptocurrencies, blockchain technologies that are properly decentralized. You do not want to go for the centralized ones. That's where the government and the banks come in, and that's where they get you. And that's where we need to discern between the differences between the two. That's very important. Anyway, as we close this off, John, what's your bottom line for those watching as we deal with all of these issues all around the world?
Don't trust central bankers and politicians. They're liars. that's basically the bottom line here. No, it's just, you gotta understand that this system that we have today is just is just hanging on a thin thread, because it's all a trust-based system that keeps value to a fiat currency. And when that breaks, it's game over quite fast. So if you are not prepared at that time, you are gonna have to suffer severe consequences for those actions that you didn't take as an individual. And unfortunately, there's going to be a lot of people that's going to be left out there. And then, of course, what happens during those crises is a call for authoritarianism, which we saw after the Weimar hyperinflation, where you got the socialists, the Nazis in that turn into fascist or whatever they like to call them. And that's what you will see, like the rise of that. And you kind of see it now with Bernie Sanders, all these people that, are borderline communists now, that are trying. And then on the other side, you have like borderline fascists like Donald Trump out there, that are on the other side of things. So you're definitely seeing the big clash again of fascism and communism, two collectivist thought models that are totally obsolete, where we should think about the individual instead of the collective. So you need to be aware of those causes and educate people that just because this failed, doesn't mean that somebody's gonna be able to save you. You are your own savior, and you need to take responsibility for your own life. It's not the government that's going to save you, because if they will be let to have full power over you. Look at China and see how great it is over there. Do you want that? Well, if you want it, well, go right ahead. But I definitely don't want to live in a totalitarian technocracy like that. So I think that's the bottom line, Josh, and everybody just needs to understand that, just education, and it's so, like, you need it now more than ever. If you don't do it now, we've been talking about this for a while, but this is the time, Josh.
Yeah, I mean, and even the people in China are fighting collectivism, and collectivism is cancer, folks. This is all theater. It's all a big reality show, and it's up to you to break free from it. Anyway, thanks for joining us today, John. There's so much to talk about, and we'll be back at you guys with much more here at WHAM, so stay tuned to our heavily shadow banned channel. Make sure to press like and share and do whatever you can to make sure that we are seen. Make sure to check that intro video coming up right in 10:09. Anyway, this is Josh Sigurdson and John Sneisen signing out from World Alternative Media. Find the truth. Be the change. Like what you see here at WHAM, don't forget to check the links below. GoFundMe, Patreon. We cannot do it without you guys. Every donation is extremely, extremely appreciated, as we're getting incredibly shadow banned. We've lost 80% of our audience since January of 2019 and counting. They are ripping us apart here on YouTube, and the only thing we could do in the meantime as we prepare for the next big step is to ask for help from the viewers that support our free information that we try to post on a daily basis. You can also find us on Subscribestar, where just $1 a month, that's all it takes, $1 a month is all it takes to truly make a huge difference. If everyone gave $1 a month, it would change everything for independent media, and we could win this information war, and we can defeat the mainstream medias eventually. And of course, on Subscribestar, we post subscriber-only content that you'll only see on Subscribestar. So make sure to pledge there, become a patron. That makes a huge difference, guys. And also, don't forget to check out our Bitcoin address below in the comments and description, as well as on the screen for you to scan, if you please. And also, don't forget to subscribe to us on the alternatives. We will likely be deleted by YouTube in the next 2 years. It's already happening on a vast scale, so make sure to find us on float.app. That's flote.app. at Josh Sigurdson, as well as at WHAM, W-A-M. Float.app is replacing every social media, and I mean, it's just incredible the opportunities it provides for not just creators, but for the average person who wants to get away from these nannies telling them what they can or cannot see. They plan to replace Facebook, Twitter, YouTube, Twitch, Tumblr, Reddit, and Patreon. You could subscribe to us on Float and pledge with cryptocurrency. It's really innovative. We are also on BitChute at World Alternative Media, as well as so many others, Minds, PocketNet. You can find us at World Alternative Media on Instagram. There's many options. And finally, don't forget to join us at Anarchapulco 2020, the famous event, the best Liberty event known to mankind, other than perhaps Anarcho Vegas 2020. There are two major events coming up that we are extremely excited about, and you can use promo code WHAM, that's WAM, and save 10% on your tickets to these legendary conferences. There's so many amazing people speaking there. You won't want to miss it. So make sure to support in any way you can, even if it's just sharing our videos, pressing like, pressing to be notified. Anything helps, folks. You are the change you wish to see. Thanks for watching, everyone. And until next time, this is Josh Sigurdson signing out from World Alternative Media. Find the truth, be the change.
I'm sure you have already changed people's minds in your young age because you're involved, and I like that.